Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. Today, we're diving into Smart Financial Incorporated's latest financial report, a Q3 update for 2025 that has got some interesting moves. So, what is the big picture here? Smart Financial is showing growth in key areas. But there are also some significant strategic shifts like selling off part of their business that are reshaping their financial landscape. Let's break down what these numbers really mean for the company's journey. And hey, if you love getting these kinds of insights directly from the source, make sure you are subscribed. We also have a Discord community linked in the description where we discuss this stuff in real time. First off, let's get a handle on the scale of things. As of the 3rd of November 2025, Smart Financial had just over 17 million shares of common stock out there. That is a concrete number and gives us a baseline for understanding their size. Now let's jump into the heart of it, the consolidated balance sheets. This is like a snapshot of the company's financial health at a specific moment. Looking at the 30th of September 2025, their total assets shot up to over $5.7 billion. That is a solid jump from about $5.2 billion at the end of 2024. Where did all that come from? A big chunk of that growth seems to be from deposits, which climbed to over $5 billion. That is a huge increase of more than $360 million from the previous year end. It looks like people are trusting Smart Financial with their money, which is always a good sign for a bank. And what are they doing with all that money? They're lending it out. Their loans and leases jumped to over $4.2 billion. It is a significant increase from around $3.9 billion at the end of 2024. This shows they are actively growing their core business of lending. But with more loans comes more risk. You can see they have an allowance for credit losses, which is like a rainy day fund for bad loans. This number is around $39 million. While it went up slightly from the end of last year, it seems to be holding steady relative to their loan portfolio. That is usually a good sign that they're managing risk reasonably well. Alright, let's move on to the income statement, which tells us how much money they're actually making. Their net interest income, the difference between what they earn on loans and securities and what they pay on deposits and borrowings, was a healthy $42 million for the third quarter of 2025. That is up from about $35 million in the same quarter last year. This is partly because their loan balances are growing and partly because the cost of their deposits went down, likely due to interest rate changes. Non-interest income, which comes from things like service fees and other financial services, was about $8.6 million for the quarter. This is slightly down from last year. Now, part of this story is something major that happened in the third quarter. Smart Financial actually sold off their insurance arm, SBK Insurance or SBK. This sale brought in a gain of almost $4 million. This definitely boosted their income. But if you look at their overall non-interest income, other areas must have seen a dip to offset this gain, leading to a slight decrease compared to last year. Looking at the loans themselves, interest income from loans and leases was over $64 million for the quarter, a nice bump from about $54 million last year. This aligns with their increased loan balances and likely higher interest rates. Now, expenses, non-interest expense was around $33.8 million for the quarter. This is up from about $30.8 million last year. A good chunk of this increase is in salaries and employee benefits, which makes sense as they grow. They also had some restructuring expenses, which are usually one-time costs associated with big changes like selling a business. And taxes, they paid about $3.3 million in income taxes this quarter, up from $1.6 million last year. Their effective tax rate also went up, which is usually what happens when a company makes more money. All of this leads to their net income of nearly $13.7 million for the third quarter of 2025. That is a substantial jump from $9.1 million in the same period last year. This shows a positive trend in profitability. Let's briefly touch on shareholders' equity. This is essentially the owner's stake in the company. We see some activity here with stock options being exercised. This means employees are buying company stock, which is generally a positive sign. They also paid out dividends to shareholders. In 2023, that dividend was 24 cents per share. It is good to see them returning value to investors. Interestingly, they also repurchased some of their own stock. This can signal that management believes the stock is undervalued, or it can be a way to boost earnings per share. Now for the cash flow statement, which tracks the actual movement of cash in and out of the company. For the first 9 months of 2025, net income was about $36.6 million. This is a solid increase from $26.5 million in the same period last year. This increase in net income seems to be flowing through to their core lending activities, with a net increase in loans and leases, despite some significant investing activities like purchasing securities. In their investing and financing activities, there is a lot going on. They made significant purchases of securities, but interestingly, they also had large outflows related to the repurchase of common stock, totaling over $136 million for the 9-month period. This is a significant amount and shows a strategy of returning capital to shareholders alongside business growth. Let's look at how the company operates according to their notes on financial information. At its core, Smart Financial Incorporated is a bank holding company. Its main job is owning and managing its subsidiary, Smart Bank. They offer financial services across Tennessee, Alabama, and Florida. This note on loans and leases is where we see the details about their lending business. Their commercial real estate loans specifically to non-owner occupied properties are their biggest category, reaching over $1.1 billion. This is a sensitive area, as they themselves admit, heavily influenced by real estate values. Commercial and industrial loans are also a significant portion, close to $800 million. These are basically business loans, and their risk depends a lot on the health of the businesses they lend to. The fair value disclosures are important because they tell us how the company values certain assets and liabilities that don't have easily observable market prices. They use a hierarchy to rate how they determine fair value. Level 1 is based on readily available market prices. Level 2 uses observable data but not necessarily for identical assets. Level 3 uses unobservable inputs, which means management has to make more judgment calls. They actually have a decent chunk of assets like their collateral dependent loans valued in level 3. This means their fair value estimates involve more uncertainty and reliance on management's assumptions. Here it is, the sale of SBK Insurance. They sold their insurance business on the 5th of September 2025. This move brought in $11.5 million and resulted in a gain of nearly $3 million after taxes, which definitely boosted their earnings for the quarter. It also meant they had to write off a significant amount of goodwill and intangibles associated with that business, impacting their balance sheet. Looking at the overall financial performance for the third quarter, net interest income increased by about $9.7 million compared to the same quarter last year. This is a really positive sign, showing their core banking operations are performing well. However, their non-interest income as a percentage of assets went down. While the sale of the insurance company brought in a one-time gain, it seems other fee-based income streams were weaker this quarter compared to last year. On the expense side, thankfully their non-interest expense as a percentage of assets actually decreased. This means they are managing their costs relatively well, even with growth. So what is the story here for Smart Financial? They're demonstrating solid growth in their core lending business and their deposit base. The sale of their insurance subsidiary is a clear strategic move to focus on their banking operations, and it did provide a nice income boost in the short term, though it also had an impact on their goodwill. The fact that their net interest income is up so significantly, even with some dips in other income areas, is a strong indicator of their banking fundamentals. However, the increasing reliance on level 3 fair value measurements and the exposure in their commercial real estate portfolio are areas to watch. These could represent increased risks if economic conditions shift. The company appears to be navigating these changes well, but constant vigilance on loan quality and evolving market conditions will be key. That is our take on Smart Financial Incorporated's Q3 2025 filing. What do you think about their strategic decisions and financial performance? Let us know in the comments below. If you found this analysis helpful, please hit that like button to support the channel. And of course, subscribe for more deep dives into corporate finance. And don't forget to join our Discord community linked in the description for live discussions and more. Thanks for watching, and we'll see you next time on Corporate Decoder.